Rich Dad, Poor Dad. School teaches us how to study, how to score good marks, how to earn degrees, and how to prepare for a job, but it never teaches us how money really works in real life. This is the biggest gap in our education system, and this gap is exactly what the world-famous book Rich Dad, Poor Dad by Robert Kiyosaki tries to fill. In this video, you will get a complete and deeply explained summary of the book in such a simple way that you will not feel the need to read the book yourself. The entire book is based on the life experience of the author, who grew up with two father figures in his life. One was his real father, whom he calls Poor Dad. He was highly educated, had multiple degrees, worked in a government job, and always believed in job security, a stable income, and promotions. The other was his best friend's father, whom he calls Rich Dad. He was not very formally educated, but he was a successful businessman who understood money, business, and investments very well. Through these two characters, the author explains that being educated and being financially successful are two very different things. Poor Dad strongly believed that if you study hard, get a good degree, and secure a safe job, your life will be stable and successful. Rich Dad, on the other hand, believed that if you work only to earn money, then money controls your life. According to Rich Dad, most people work because of fear of not having money and desire for comfort and luxury. This fear and desire trap people in a cycle where salary comes, expenses increase, and then they wait for the next paycheck. This cycle is called the rat race, and most people remain stuck in it for their entire lives without ever becoming financially free. One of the most important lessons of the book is financial literacy, which starts with understanding the difference between assets and liabilities. Rich Dad defines an asset as something that puts money into your pocket, and a liability as something that takes money out of your pocket. This definition is very different from what schools and society usually teach. That is why the author makes a shocking statement that if your house or car does not generate income, it is not an asset, but a liability. Assets include things like rental property, businesses, stocks, dividends, bonds, and intellectual property, such as books, courses, and YouTube channels. Liabilities include home loans, car, EMIs, credit card debt, and lifestyle expenses. Rich Dad teaches that rich people focus on buying assets, while poor and middle-class people focus on buying liabilities, thinking they are assets. Most people use their salary to buy expensive cars, bigger houses, and luxury items, which increase their expenses instead of creating income. Rich people use their money to buy assets that generate cash flow and use that cash flow to pay for their lifestyle. This is the key difference between becoming rich and remaining average. Another major lesson from the book is the idea of mind your own business. Most people spend their entire lives building someone else's business by working for a company while neglecting their own financial future. A job is important for survival, but it should never be your only source of income. Rich Dad advises people to work at a job, but at the same time, build assets that will one day generate enough income to replace their salary. This is how financial freedom is achieved. The book also explains how the tax system works differently for the rich and the poor. Poor Dad earns a salary, pays taxes first, and then spends whatever is left. Rich Dad generates income through businesses and investments, uses expenses and reinvestment strategies, and pays taxes at the end. The rich legally reduce their tax burden through corporations and financial planning. This is not about cheating the system, but about understanding how the system is designed. Rich Dad also strongly believes that people should work to learn and not work only for money. Poor Dad believed in job security, while Rich Dad believed in skill security. According to Rich Dad, the most valuable skills are sales, marketing, communication, leadership, and basic accounting. These skills help people identify opportunities, build businesses, and create multiple income streams. A high salary does not guarantee long-term success, but strong skills do. Fear of losing money is another major reason why people never invest. Rich Dad explains that everyone feels fear, but rich people learn how to manage risk instead of avoiding it. They learn from their mistakes and failures and use those experiences to grow smarter and stronger. Failure for them is not the end but a lesson and a stepping stone toward success, the final message of Rich Dad. Poor Dad is simple yet extremely powerful. If you want financial freedom, you must take control of your money instead of letting money control you. Focus on building assets, reduce liabilities continuously, educate yourself about money and investments, and develop valuable skills. Always remember, the rich buy assets. The poor buy liabilities, and the middle class buys liabilities, thinking they are assets. In the end, it is simple. The rich buy assets. The poor buy liabilities, and the middle class keeps working, thinking they are moving forward.